Bausch and Lomb outlining a 3-year plan for profitable growth and affirming its annual guidance. The global eye health company hosting its Investor Day here in New York City. And joining us right now, first on CNBC, someone we have not seen in quite some time in person. Brent Saunders is here. Good morning.
Oh, thanks for having me, Andrew.
So the biggest message of this day, you got a whole day.
Whole day.
Whole day. What's the first thing you're going to tell everybody?
First thing is financial excellence.
Right.
We're going to lay out a 3-year plan to grow above the market and, very importantly, improve margins, about 600 basis points of margin improvement over the next 3 years. So fairly significant.
And how are you going to do that?
Well, a variety of things.
Let's walk through how this is all going to happen.
So we kicked off a program earlier this year we called Vision 27,
right.
To really focus on, a play off of our heritage, to really focus on a lot of discipline across our OPEX, our manufacturing network, and then most importantly, product mix to really move to the higher margin products through our pipeline and R&D.
So right now, though, but let's just understand it, because there's a mix of businesses here, right? There's consumer, there's the pharmaceuticals, there's surgical. What does that look like? Yeah,
so the biggest contributor will be surgical from the margin expansion. It also has the most opportunity. And that really is about both moving to our higher premium intraocular lenses or implants. And we've launched those already, so that's happening.
Right.
And then second, really modernizing our manufacturing footprint, which has been somewhat antiquated. We're a 172-year-old company, so there was lots of opportunity to create efficiency in the manufacturing and supply chain. The combination of those two create very powerful margin expansion for that business.
I think of you as an M&A guy of some sort, a deal guy.
I get it.
You get that. What's on the horizon?
So not much M&A. We have a very disciplined capital allocation approach. We're also committing today to trying to get to 3.5 times leverage or better by 2028 and get that investment grade credit rating. And so really for us, it's more about small M&A, small business development and licensing, mostly intellectual property to develop medicines or products for patients.
Are the tariffs hitting you in a meaningful way?
They are. It's about 40 basis points of margin this year, so about $20 million. We have a very global manufacturing footprint, but really what hurts us, we're a big U.S. manufacturer. In fact, we're one of the few companies to make all of our medicines for the U.S. in the U.S.
Okay.
So does that get you an exemption?
It doesn't. It gets us reciprocal tariffs. And so we're a big exporter to places like China and Europe from the United States, and so the reciprocal tariffs are where we see most of the impact.
Have you talked to the administration about that?
We have, and we've worked through various trade associations, but not a lot of relief quite yet. You would think there'd be more incentives to reward the people who have built and expanded their manufacturing footprint in the U.S., which is what we're doing. But because of the way we're operate, we can start to shift some of that production to Europe and Asia for Europe and Asia over time.
So the tariffs and then the reciprocal tariffs are actually causing you to move manufacturing out of the United States?
Well, shift. So we're going to shift. We already have those plans, so we're going to shift to more. We used to, 15 years ago, we moved to global manufacturing by product, and now we're going to go back to regional manufacturing.
So here's my related question to this. As a CEO who's dealing with tariffs right now, do you say to yourself, this is the forever tariff? This program, the way this is, we're in this for the next 20, 30, 40 years like this, and we have to basically plan around that?
Yeah.
You say this is a 10-year operation? You say this is a 3-year operation? What do you think?
Yeah, so I think, to be fair, we're baking it in, right, as a new baseline for 26 and beyond. And I think if you really step back and think about it, once we get used to it, it's called roughly 15% tariff revenue. I've not seen many politicians in either party want to give up revenue.
Right.
And so I don't see it going away for the foreseeable future.
The 170-year-old company business. So Bausch and Lomb used to have an ampersand.
It did.
And now I know when you were coming on, we're stressing it's now a plus. And I'm just reading what branding experts said and whether they came to you and told you this and whether you bought it and how much it costs. So listen to what it does, Brett. The plus sign, this is modernize a company's image. The plus sign carries a strong medical and health association, signaling partnership, innovation, and a deeper commitment to working alongside medical professionals.
What AI are you reading?
Does it It doesn't matter which one it is. It comes from the company. But who convinced you that, how does a plus do all those things versus an ampersand?
So I'll tell you the real story, because I was here when we changed it in 2010. I was CEO here. I left to do Allergan, and I'm back again. And so we changed it in 2010 or 11, somewhere in that period when I was here.
I didn't even know it had been that way for that long.
Yeah, and the point I was making, we were private equity owned at the time, and the company had really been stuck in neutral for about 30 years. And so I was just looking for a refresh. I wanted to reset culture. And so it was largely symbolic, but it served a purpose.
How much did it cost, that idea?
We were private equity. We didn't spend a lot of money. We weren't allowed to spend a lot of money on rebranding.
I might do Joe plus Kernan.
In fact, I wouldn't let him change the sign or the stationery or the cards till you ran out.
I have a broader question for you, which is, do you think in a day and age when we're all going to be wearing some kind of glasses, that have different things in them, there's this other view that not only will the glasses have, a display, a heads-up display, but that the glasses themselves will be able to actually change your vision for you. Do you see that as competition?
I don't. I think, if anything, we could participate if that happened. We happen to be.
I know this is a very future forward situation.
We're pretty good at optic designs. It's one of our core specialties, and particularly in R&D. But one of the things I do worry about is myopia from kids, particularly staring at screens, and that's a global epidemic. We're going to announce some programs around that today at Investor Day.
Really?
As we unveil our R&D pipeline.
And what kind of programs? What can you do?
Or are you talking patching? Like what?
No, so what we're working on is a contact lens designed specifically for kids that build the therapeutic correction right into the design of the lens. And so the kids, and we're using our latest technology, super comfortable.
I mean, it's hard to put contacts in the eyes of kids.
It is, but the way it works, and we have experience with this, it is happening in Asia and China in particular today. It's so bad that you just work with the kids, and after a week or so, kids get pretty used to putting them in. But that initial period, as a father, I know it is a very tough